Okay, folks, we wanted to give you an update on how we're doing versus Harbor Capital. So until this week, you can see we were gaining on Harbor Capital. This week has been pretty good because the Fed comes out and says that when the markets go down, they are going to subsidize the markets to keep them up. So Harbor Capital is pulling away from us. S&P 500 is pulling away, and the 2060 target date, they're all pulling away from us again. But if you look at the chart, you look at the numbers that I'm pressing, you see how close we were within the last week. We're not really worried about it because we do anticipate beating all of them this year or coming very, very close to them. So right now, you see where everybody's at for today. So you see Harbor Capital gained 4%, S&P 500 3%, 2060 target date, it also gained about 1%. It's probably going to be up another percent today. So by the end of today, it'll probably be 15 for Harbor Capital, 14 for S&P 500, 12% for 2060 target date, and we'll still be at about a 10.58%. Because what we've been doing is we've been watching the charts to see what resistance it's going to hit. And then we're going to make our decision next week on what to do. But we anticipate the markets having 10 to 15% correction once the 3-month U.S. Treasury matches the 30-year U.S. Treasury yield. Let's go to that for 1 second. Okay, from CNBC.com, what you're looking at is the U.S. Treasury yields. You see the 3-month is a 2.316. You see the 30-year yield. 30-year yield is a 2.625. When those two match up, we're expecting about a 10 to 15% drop in the market. Just like our video from late April that talked about the U.S. 3-month lining up with the U.S. 10-year yield, we expected that 5 to 10% drop. We wound up getting an 8% drop. This time around, we expect a 10 to 15% drop when the U.S. 3-month yield matches or exceeds the U.S. 30-year yield. So stay tuned. The markets will probably continue to go up another 3 to 6%, I'm guessing. If they do that, and those two yields match up to 3-month yield, 15-year or 30-year yield, expect a 15% pullback. If the markets go up 2 or 3% before the U.S. 3-month yield and the U.S. 30-year yield match, we expect a 10% pullback. We know there's most likely going to be a pullback because they need a pullback to justify the 1% interest rate cut that is coming. Stay tuned. Thanks for watching.